All right, everyone, let's go over the portfolio, the market, and some trades and structures and all the goodness of making money. All right, so to start on closed positions that we made money on, Reddit. No idea what this is. There we go. Reddit. What a great short that was, huh? And with Reddit, this was straightforward. You had this long-term, oops, go back here, go back here. So you had this long-term, that's your call gamma, and this is your put gamma. So largest is orange, largest is purple for calls. You can fix that here, largest call, largest put, right there. And this was up here, right? We were up here, and the idea was we had a lot of upfront gamma at this 250. We know the long-term call gamma was here, and look, even back then, the put gamma was way down there. It wasn't like up front. And this is a great trade because remember, when you have suppressed volatility like this, suppressed over time, a few months of suppression of vol, what you're expecting is higher volatility. And you can even see there's a spread here in the VIX that you're expecting higher volatility, right? Higher volatility. And when you have that higher volatility, what you're looking for is these types of spreads that are further out, not up front, but further out, that don't move. They don't move at all. You can see they've been there forever, right? They've been there for a year and a half or something. And, well, a year and something. But when volatility comes in, this is going to be pressure to the downside, and you're going to target this 115. You know, that's out till next year, January, right? So I put on the 220s. Now I made a mistake on this trade. I did a 1-to-1 at first and not a 2-to-1 diagonal. And then once I got a downward movement in the stock, well, I had to make it directional. And it was the movement on this day. So on that day, I had to make it a directional trade so I didn't get caught out on the distribution of returns. When you have a 1-to-1, your returns are... Let me see if I can make this a 1-to-1 to see... well, it'd have to be a diagonal to see this. You get a distribution curve like that. So you see this distribution curve? On a 1-to-1, you get that curve, and it doesn't become directional. It becomes a way to try to lower your entry up front without being caught, and I got caught. And so I had to buy back 1 to make it 3-to-2, and then after, as it rallied more, I bought downwards and I sold some, and then I had to buy it back because it kept... Anyway, I fucked this trade up, but I still made money on it. That's all that matters, right? And I could have been a lot better. But anyway, that's a great trade. Perfect. I'm out. I'm not going to wait. We already had earnings. I'm not going to make much more on this trade. It was like, I don't know, $500 or something, just because I fucked it up. So I'm out of that trade. LVS was great. Go back to LVS. Shorted LVS up here, and we collected the January credit, and then earnings came, and then it rallied, and I closed the position. Made good money on that. I think it was like 120% on that trade. Now, it looks like the spread is still there. Right? Here's the gamma spread, 55.45. So it looks like there's another downward movement if volatility comes back in, which it may or may not. We've already had a spike. But it looks like there's another downward movement here to 45. So maybe I could get back in that trade or whatever, but I took profits on that one. So far, and then I closed, I talked about this on Substack, but I closed the Microsoft and Google quite a while ago. Whenever the Substack was, when was this? Well, I don't want to load the stats on this. A mountain of... Oh, it's fucking on here. There we go. It was in New Year update. Was that... Was it this one? All right. Sorry, hold on. Yeah. So I made money on METC. I made money on TMC. Let's go back. And then I closed the Google Microsoft like I said I was in this one. Watching, watching, watching. Here. The Google Microsoft spread is not doing much, and it seems like I'm on the wrong side of the spread. We'll close this. So I closed that for like a 12% loss. And if I held it, it would have been much worse. Much worse. And I closed that over here. And the reason I closed that over there is because the spread between Google and Microsoft kept widening and widening. So every time Microsoft was down, Google was up. And Google was down, Microsoft was up. So I was on the wrong side of the spread, so I got rid of it. And look, I got rid of it. I saved that whole trade. Saved everything. So you have to watch price action, and it tells you everything. You just have to pay attention to the price action. So that was really good. But TMC and METC, I make money on. TMC, I had 2 trades on this. I rallied up to this one, made 400%, and then a 550.10 up till here, made 220% on that trade. It hit the $10 target and completely reversed. Fantastic. METC, I made 82% on. Bought it down here. Had this rally up here. 82, 90%. That's great. And it obviously rallied after the OPEX, which is classic. So I should have had a longer term on that one, but that's okay. So I made money on TMC, made money on METC, had a small loss on Google Microsoft, made money on Reddit, made money on LBS, and really good batting average. Now, Carvana. I put a Carvana trade on January 27th. This date up here, January 27th. And I was looking through all the equities, and on January 27th, there was a call, excuse me, a gamma. Oh, I saw this spread. The open interest spread of 470, 250. I thought, okay, if volatility is going to come in and play a role, VIX here, volatility's been coming in and playing a role, and there's had these long-term open interest spreads. The gamma was like 1625 or something. Yeah, 1625. And if volatility was going to come in, I was expecting that Carvana would follow suit, right? And there was right there. Here we go. Maybe it's the 26th. Maybe it wasn't 27th. I thought it was the 26th. But I saw this pin here, 487.50 and 400. And so on the 27th, I placed a 2-to-1, 400 April-March spread. The very next day, Gotham Research came out and did a short report. And the implied volatilities on Carvana exploded. And made some... I still have the trade on. I not only did the 2-to-1 spread, I actually added more to it, and I made it a 4-to-1. So it's like a 20. It was a 20 to 5, and then I closed the spread, the 5 to 5 spread. So I have 15 left, right? So I have 15 left, right, at 20.76. And since then, it's just been bouncing and bouncing on the gamma pins. Hasn't been doing much. But what I wanted to point out on this trade is that right now it's a $31,000 position. It wasn't when I put it on because I had a spread on it. So it was slightly less, but because I bought the spread back, it now says 31,000, right? So just make that clear. But what I wanted to show here is that earnings are coming up on the 18th, you see, after market close. And, well, what I can do here is because I have 15 outright at 400, I was looking at this open interest, and I saw it move down to 380, 250 on earnings. See that? Right on earnings. But there is potential here that this rallies because everyone knows this is a fraud. Everyone knows, everyone's short this thing. So there's a chance it rallies because everyone thinks it's bad, so it just goes up, how the market works. But here's what I can do. Check this out. I can go to the Februaries here, I can go to the 400s. I can short 400s. And I can make it a 3 to 2. 3 to 2. I can get all of my money out, minus like $600 or something. I can pull $31,000 in credits in 2 weeks on this thing, right? Now, if it tanks and goes down 20%, I'll make 57 grand. I mean, if it goes more, I make more. But let's say 20%. It's kind of like your average big move down. And, well, I make 57 grand. Fine. Close the trade. Fantastic. Thank you very much. Have a great day. Now, if it does nothing and rallies, all my money is out of the trade. Doesn't matter. It doesn't matter. Nothing matters. But I'll collect all my money, close this, then it becomes a free trade out till April. Because I'll collect February and I'll have out till April for this to now push downwards and tank, I don't know, maybe 250 or whatever that thing was, and I can make 200 grand, right? So I can pull all of my money out and make a risk-free trade. That out till April, a risk-free trade out till April. Thank you very much. I'll do that. So on Monday, I'm gonna do that. I'm gonna make it a 3 to 2 diagonal at 400. I'm gonna pull all my money out and make it a risk-free trade until April. That's what you want. You want to do those things. Now Google, man, check this out. Before I go into that, I'm gonna show you some crazy shit in the market. Look at this. This is after hours in Google. This is earnings. So on Google, you have this 310, 350 gamma spread. You see that? Look what it did after hours. It hit 310, rallied all the way to 350, came all the way back to 310, rallied back to... This is a $1 trillion movement. It's like, what the fuck? Like, trillions of dollars just being made and lost. But you can see it's buying on the gamma pin and selling on the upper gamma pin. See that? Very important to have these on your chart. So with this one, I could do something similar. With the price action and knowing that there's buying on this 310, remember I shorted the 300s. I have 14 outright, 4 in April, 10 in June. Well, I could come back in here, and on Feb 20th, look, Feb 20th, there's the 310s. Well, I can't short the 310s because I have level 3 options, not level 4. So I can't short 310s, right? I can short 300s and be okay. So 300s. And I come down here. Now I could be really greedy and do 14. And you could see I can reduce my entry cost by 14.5%. So it's like 16,885 to like 13,920. That's about 14.5%. So in 2 weeks, I can pull off 14.5% of my money just by shorting the February 300s, not 310s, 300s. So if the price comes down to 310, I would expect buying to protect this short I have, and which means I can take money out of the stock. And I think I might do that. Google has a lot of call delta here, has a lot of call delta. And what typically happens is that if volatility is now on its downward movement, which who knows if it is or not, it's still got this spread on. But if it does push down lower and lower and lower and lower, well, all the equities that have really strong call delta just fade up and up and up and up and up. It does this type of move right here. That linear upward movement every day. Just tick, 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 tick. It just keeps pushing up. Low volatility like this over here. So if that's what it's going to do, and it's just going to push its way up to the 350 gamma pin up here, well, I can ensure that I at least pull 14.5% of my money out. Then at some point, I could come back in and add that back into the stock if I wanted, right? So that's my plan there. I'm just going to protect and collect credits in February from Carvana and Google. Now, I'm running out of trades now, and the reason I'm running out of trades is I'm waiting for like really obvious fat pitches. I'm not trying to force anything. I've been waiting on so many names. Iron, I've been waiting on. I said that over here in Substack as well, that I'm just waiting on all these. And the reason I'm waiting is because volatility was so low, and I was waiting for like a increase in vol. I wasn't chasing, and then now we got a pullback. Look at that, 40%. That's because you just be patient. And I know I want to buy down here. Well, look at this. I don't know if I missed the trade or not, but look at here. Overnight, it went down like 30% below 30, and it rallied 52% from that 30 level. So overnight, it already hit the 30 overnight. See that? It hit the 30. Now, I don't know if that's like valid and like now it's off to the races, or if you just have to like wait for the live session data to work. I don't know. I've never, I don't know the rules here. Right? So that's like 30 was like, was it the delta or the open interest? I can't remember what it was. Open interest. Maybe it's changed. It's down here. Is this put open interest? Then you have the 110 calls. Look at that. So this thing has a really huge range, which means it's going to be very volatile. And at some point over here, I want to be a buyer. And it already hit 30. So I don't know what the rules are. I guess we'll just have to wait and see. But 30 is a massive level, and we may not get it. It's already moving upwards with the moving average, and it may just push higher. Maybe I could put a trade on there. Who knows, right? But I've just been patient. Look at Nebius. I think Nebius hit 60. Did Nebius hit 60? I can't remember. Oh, almost. Well, overnight it went down to 70, not 60. But that rallied 26%. That was a big move on Friday. But you can see I'm just waiting and waiting and waiting and waiting and waiting and waiting, right? And I'm trying to buy those lows if you can. So data centers did really well on Friday. You can see that. APLD, kind of the same thing. Okay, TMC. TMC looks like a trade. Here. Look at that. That's the open interest. A lot of call gamma. Not much put gamma. Put open interest down there. Looks great. Gamma levels. It's still this $7 and this $12 right here. So TMC looks great. And what I could do effectively is like, hey, like I can go to Carvana. Look at this. I go to Carvana. I sell 10 at 4 and get all my money out. So I get 31 grand credited to my account. Well, then I could take 10 grand of that credit and I could go put it in TMC. You see? So when I get these credits, I can just roll it to another trade, get a credit, roll it to another trade, and eventually you just try to make your trades risk-free, quote unquote, if you can. And you do that on really big moves. And the implied volatility here goes up so aggressively that it allows you to convert these to like 3-to-2 diagonals to where you could get out risk-free. And then you just let the trade sit there. And man, if things really tank in 2 weeks, then you make a lot of money. If nothing happens, you get all your money out and it's free till April. See? Okay, look at TMC. Now, TMC, the option prices. Okay, so we have March 26th for earnings. And the largest call gamma is after it in May. See that? So March 20th, which is an OPEX, will not be a part of earnings. So the pricing of that is going to be less than what you would find on an earnings release. See? Much less. Because it's not including the implied volatility of earnings. So if I go to May, these are fairly rich in pricing. Large IV, implied volatility. You could see that the $9 is a 10% premium to the long leg. See that? That's fairly high. Usually, it comes out to about 5%. That's what I found all the really good trades come out to. They come out to about 5%. But this is a 10%, which, you excuse me, you typically see that around the 40 delta if there's a lot of implied volatility. Now, one strategy here is we can leg the spread, where let's say if there's buying up to this $7, we already had our VIX rise. Well, it could come back again because there's still this February 18th spread up to 25. So it could come back again, that's for sure. And if that's the case, then TMC is going to go down to this $5, which I think is where the open interest sits. Or the delta, what is it? There's something down there. It's delta. So the call delta is long-term at $5. So anything below that is a buy. So if we do have one more volatility move, it may bring it down there, right? Which is, not the greatest. But what we can do is we can do two strategies here, a part of the trade. One is that maybe we're not confident that the implied volatility is over. So what we do is we just take half of a trade now. So if I was going to put on a 10 grand position, I put on a 5 grand position. So you just put on half a trade. That way, if volatility comes down here, you could put your full trade on at $5. And if nothing happens and it goes up, well, then you make money. Like, who's going to argue, right? So here's your $5. It's $1.15 on $8. Target is $12. So that's a $4. 12 minus 8 is 4. 4 over 1.15 is what? 4 to 1. 15 goes into 100. 15, 30, 45, 60, 65, I don't know. Less than 10 times, right? What is that, 7.5? Anyway, so 4 over 1.15 minus 1 is 247% gain. That's not bad. That's pretty good. You usually see levels around that. But what I want to do is I can put on an outright May $8. It's above this $7 put gamma. And if it rallies aggressively above that, above 8, and it gets to 9, well, that's $12 and $15 calls at that time are going to be elevated, especially if volatility does something like this, right? If you get something like this. Well, those contracts are going to be heavily elevated, which means you can leg the spread. So let's say through February, maybe up till March, you get really large movements. We're sitting at $10, somewhere around there. And you can come to May and convert it to a call spread. And maybe you can short the 15s or something. Maybe you short the 15s, and those are $3 at the time. Who knows? I'm just trying to give you an example. Well, when you do that, you can convert it directionally like this. You can do it like this and pull all your money out, but let it ride to 15, right? You can convert it to a call spread. And so what I mean by legging the spread is you can do an outright, wait for the volatility move, and then place your trade, where we can maybe go to March if it moves quickly, and we can do the 12s, and we could do 25 to make it a 2-to-1. And maybe this is, I don't know, 80 cents or something at the time, something like that. So we can pull money out. It's still directional, but we pulled 80 cents out, so the trade becomes a 35-cent entry. You see that? It'd be 35 cents at 8, and what is 4 over 35? Right, it's 1,000% gain, because you would have pulled your money out, right? And just if it goes to 12, that is. So that's an idea. You just buy the outright. We're going to buy half because I really want to buy this at 5, but we already had a volatile move, and who knows, right? And it's this put gamma has been sitting there for a while, and so maybe it's going to maybe consolidate below it and then push above it, so we may not get to 5. Also, there's a lot of put delta down here because it's all red. See all that? That's directional. So if there's a lot of selling, you're going to get a lot of selling. If there's a lot of buying, you're going to get a lot of buying. That's directional for the dealer. Now, when the dealer's in call gamma, like this, they're typically sellers, and when it goes above a pin, they're a seller. When it goes above a pin, they're a seller. When it goes below a pin, they're a buyer. And you get this kind of choppiness when you're in call gamma. And when they're unable to stop all the flow of options or buying, it becomes a squeeze, and they become directional. That's a gamma squeeze, because the rate of change is too much. But usually they're trying to pin this thing when you're in large call gammas. But just I wanted to note that when you're heavily put gamma, you get very big directional moves. Now, another thing to keep note is I have some other trades that I'm looking at. I'm just waiting for and waiting for and waiting for. So look at LAC. I want to give an example here. You see how this upfront put gamma is there, right? But you have this long-term call gamma. When you have this discrepancy like this doesn't technically mean it's going to rebound there because it's so short-term. One example would be CRM, where so I want you to watch this upfront put gamma. You can see here's the call gamma. It's not a long-term spread, but all the put gamma is sitting here. That's where all the put gamma is. And when you look at that and I step forward, look how the put gamma just keeps pushing lower, but the price isn't, it isn't necessarily, let me, hold on, let me step forward. I just want to be, this is instructive. Here we go. So if you just looked at this, you would think, oh, there's the put gamma and here's the call gamma, so I'm going to write it to 250. No, like when put gamma is so short term like that, when the largest put gamma is so short term like that, it's not a type of spread trade like Reddit where you have long term like this. You see this spread here? These long-term spreads here? It's not like where it's on the same expiration, but it's very, very long-term. That's much different than this staggered nature like this. So you got to be careful with that. And this gamma here, look at, you see how it just keeps riding lower? It keeps riding lower, it pushes up, it rides lower, and there's some slightly longer term, and eventually you're going to lose control of this one, this call gamma. See, pushing lower, pushing lower, pushing lower, pushing lower. See that? So you got to be careful with this upfront put gamma. And so when I'm seeing something like LAC, you got to be careful with that upfront. Here we go. You got to be careful with this upfront gamma. Go to today. There we go. You see it was there, now it moved lower. What you're really looking for is a long-term spread like this. See that? 120, 180. This is Live Nation Entertainment. And what I'm waiting for here is 120. I'm not waiting, like it's in the middle. It can go up, it can go down. It's not obvious. There's no really big fat pitch that I could trade. And so I'm just waiting on that. So if I go to LYV, what I do here is I bring this up, 120, put gamma. I always put that on there. And you could see in the past there was buying below. See that? So we know that there's support down here. And if I go out here, the target is 180. And it's fine. If this rallies to 180, oh well. Like, there's an infinite amount of opportunity. See that range? And what we're really waiting for is this 120 level. Maybe earnings will get us there. Who knows, right? Maybe earnings gets us there. But once we're down there, we're going to look at this structure and see if this still remains. Then what we're going to do is we're going to wait and be patient and see how the price reacts around that level. We're going to see if we get buying support. We're going to see if we get buying. And this candle here is a real obvious idea that you need to be a buyer. That's just so obvious when you get big shit like that on the gamma pins. I mean, look at that, right? So that's, I'm just waiting, right? Okay, let's go down. Nothing there. I forgot why I had that one on there. Must have changed. Nothing on there. Here's TMC, right? Now you don't have that same structure. You have upfront puts, but the open interest here is pretty strong. You see that? Large open interest there. All the put delta is at the $5 that we talked about over here. So it looks fairly supportive. I'm okay with that one. METC, I want to do another trade right here below 15 if we can get it. Buy below, see there, 15. This is the call gamma, or sorry, call delta, right? Now that one we have to be a little careful because the $30 is only till March. And if we go to bar, you could probably find out where these are. $30, go after March. It's still there. So you could see this 15-30 spread. That's what we want to play. So anything below 15, we want to be a buyer and target 30. Now there's not a lot of open interest in here, so got to be a bit careful with that one. Very careful. Because open interest is what really drives all the delta and gamma and everything. There's LVS. Already took profits in that. Great trade. But looks like there's another call gamma here. Call gamma 55, put gamma 40. That's a spread out till March. So maybe it just fades down to 45. That could be another trade. We could re-enter LVS if we wanted to, right? Maybe on a pop of a moving average, maybe 50, 60, somewhere in there. But here, so I come in here, I put 55 call gamma. Look, it bounced right on the call gamma. 45 put gamma. See? So that's kind of like the range you would expect this to go if volatility pushed higher once more. There's Reddit, and that's it. So that's pretty much what I've been doing, and I've just been waiting for fat pitches. I've been every day looking at the screener, sorting by delta as a percentage of float, and looking at gamma levels, trying to find some longer term names that have those longer term spreads. And what I'm doing here, I'm just looking at the purple and the orange. Purple, orange, that's the range. Look at how it comes up, sells below, comes up, sells below, buys, above, sells, below, buys. You see how it's chopping between these two levels right there? See that? So it's just been chopping forever. So what I'm doing is I'm trying to find a long-term spread. Here's another one. UAMI between 7 and 10. That's not a very big spread. And I'm trying to find longer term. We already looked at IREN. Nothing there, nothing there. And so I'm waiting for fat pitches. And sometimes you don't get fat pitches. Right? They just don't show up. That's okay. That's pretty short term, short term. Nothing there, nothing there. That's a big spread. Nothing there. Looking at purple and orange, looking for big spreads where, look at M phase, look at this. Came below, rallied all the way up to the call gamma. Now, I'm not going to ride that down. You could, right? But that was the trade there. See that? Here, see the spread? Same expiration, long dated. And I'm not trying to force trades. This is pretty short. Remember, short dated gamma like that is pretty dangerous. It could change very aggressively. Right, here's short dated gamma right there. But maybe it's here as well. So If this was further dated like this, that may be a trade up to 20, but it's not obvious. There's TMC. Man, if this got squeezed, that'd be great. Herbalife doesn't look like there's a lot of open interest, but that's almost an idea for a short. But remember too, is that, you know, we've been pushing up in this volatility unwind. See that? So volatility has been elevated. The spread is still there up to 25. So in the next few weeks, maybe you can go back to 25 again. So the idea is that we want to buy below the put gamma up here. And maybe there, if that's where the top was. You know, we want to be buyers here, and we want to be very, very cautious when volatility is down here. It's suppressed for a while. I'm not talking like one day it just goes down here and we got to be careful. I'm not talking about that. I'm talking about a long-term compression. And when you're in this area, you got to be very careful because you're going to get these vol events like that. You get the vol event. So we're kind of in no man's land with volatility. We can push lower, we can push higher in that spread. And so if volatility suppresses, these things are just going to march higher. That's just what happens. Especially the things that have there's probably a lot of call delta here. Yeah, all this deep in the money call delta. If volatility compresses, you're just going to get upward movement here. Just how it works. But I'm not chasing. That's not my style. I've lost more trying to chase than I have just waiting for a good trade. So I just avoid it. It's not worth it. It's not worth the headache of putting the trade on. It goes down, you close the trade for a loss, and then 3 months later, it's up at 300%, right? Like, that's just really annoying. And I would just rather wait for really good trades and hold them, like down here, and hold them to those big rallies. That's easier to do than, you know, trying to buy here and then it goes down and you're like, fuck, am I out of it or not? And you close it, then it rallies, fuck. And then you chase it here and then it rotates lower. It's too much of a headache. I just avoid those types of scenarios. I'd rather see some consolidation before I do that. So you can see here, I've been looking and looking and looking. And CoreWeave, like, there's just not much opportunity in a lot of these names. Like, you're not going to make a lot of money moving 10 points in options, especially if volatility is really high. So you could see, like, a lot of the gammas up front. And a lot of these high-flying names, a lot of the gamma is just up front. Short-term trading. And that's okay. I don't care. I'm not about that. I'm looking for the big moves. Not trying to FOMO. But if you're more comfortable FOMOing, go for it. Do that stuff. But so you can see what I do. I just kind of scroll and kind of observe, and when you get good out of it, you can kind of see a chart and just know it's really good. Man, if this put gamma and FSLR was over here, dang. If that open interest was like here and you had this pin here, that would have been a nice chart to go long. It's sitting right in the center. You see that? You have all the puts to the left and all the calls to the right. It's sitting right in the center. So it's a coin flip, right? So that's a coin flip. That's open interest. Go to gamma. And that was LAC, right? Restoration Hardware. So yeah, I'm not finding a lot of interesting names to go long. You could see like we've just been down, up. Like you try to buy the dip, it rallies, you think you're a genius. The next 3 days you're losing money and you're like, fuck. You close it and then it rallies, you're like, fuck. And you get back in and then it comes down, you're like, fuck. And then it rallies, you get back in, it comes down and you're like, fuck. So you know, trying to buy those dips on this is, it's really difficult, and you just got to be patient and patient and patient. And pretty soon, the trade will look very obvious. It becomes very obvious. You don't have to force the trade. That's all I'm saying. You don't have to force it. It's just once you see enough of this, it becomes natural to where you just know. I mean, bull looks interesting, right? Maybe if I get rid of that large bullshit to the left, there we go. That looks kind of interesting, but remember, upfront gamma is not indicative of a bounce. It can bounce, but you want long-term put gamma. You don't want this short-term bullshit like this. That's just options that just keep piling in, I'm pretty sure. Yeah, see, options just keep piling in, and it's creating all that short-term put gamma. So you got to be careful with that upfront stuff. You want spreads like this, but you don't want them in 14 days. You want them in 60 days or something, right? Now, they're much harder to come by, and they're much harder to come by because those trades work the best. And the trades that work the best, you don't get a lot of them. They don't happen all the time. And so, yeah. So this is what I've been doing, and I haven't really found anything. Something that looks interesting, I put on the watch list and just kind of check it every day to see if things are aligned and, you know, trying to pick my spots. Intel might be interesting on really compressed volatility over time, you know, maybe into March. But by then it's going to be too late because that's where the gamma pin is. If this was over here, it would have been more obvious. I mean, it's probably sitting there. Let's see. That's March. Yeah, so you see how it's like equally distributed up to 60? I wouldn't want to deal with that. That's a squeeze, a potential squeeze. So I just want to probably avoid that. Upfront gamma, 14 days. Man, I swear, some of these were just longer term. They would have been such great trades. You can see, like, just upfront. You could probably play that next week or something, right? Like, I don't get into that short term. It's too random. Another upfront put gamma. Dang. Yeah. Okay, nothing much. Let's look at market cap. Just look at the big boys and see what they look like. Okay, Nvidia, that's 200 we talked about. Did I show you that one here? Look at Nvidia. Look at all these gamma pins. Look at overnight. It touched 170. On Friday, it was up 10% from that level. That's like $400 billion or something. Because it hit that gamma pin and rallied. Look, go back one day. Look, 170 up front. Doesn't always mean it's going to bounce, right? Got to be careful. But it bounced on it. Up 10%. And then it shifted to 180. So 200 is still sitting there. That's been there forever. And so that's kind of the resistance. So on Nvidia, you could see I have the 170, 200. See that? There's a dot there. There we go. Oh, there's another one. Okay, we do this. We do 170, put gamma. Oh, that changed actually, right? Call gamma. That's where it was. And this is now 180. See? So I like to look at these and see what's going on. And this is the opposite. Apple's the opposite. Remember? You have like short-term, long-term. Then you have short-term, long-term. It's the opposite. So maybe that's Apple 280 down to Apple 250. Look, it bounced there or initially. Bounced there in the past as well. It sold above there. So that's kind of like the range in Apple. Tight range in Google. That's what we're playing. Kind of a tight range in... that's class C, I think. This is the class A, if I recall. Microsoft. So that might be just an interesting trade against an NVIDIA, like a spread trade. Now, I don't know if I want to get back into this, but man, it's upfront put gamma, and there's this huge 575 out till December, the end of the year. Now, where's the open interest on this thing? 350. Man, it's in no man's land. Is it put delta? It's all put delta, which, man, all put delta, this thing just goes down and down and down and down and down. You really just don't get reversals. But I haven't really seen this very much in large mega caps before. It's mostly in growth names. So that's going to be interesting to observe. But usually when you get all this put delta, it just fades and fades and fades and fades and fades, and there's no bounce. So I want to avoid that, but man, it's actually becoming lucrative. Amazon has this 200, 230 spread. Maybe that's something you can play. That's interesting. Maybe if it comes down to 230 or 200, maybe you can target at 230. It's a long-term spread. See that? Same expiration into March. See that? Maybe that's something you can play. Nothing there. There's another spread, Meta. 645, 700. Sometimes you can do expirations like this, and it's easier to see. Right? And then I'm going to do max so we can see the full view. Come down, come down. There's a spread there. Upfront spread there. But I like looking at this one, historical, because I can see the price action as well. Look, JP Morgan, 300, 325. Look at that. 300, 325, 325, 300. See? So just watch these gamma levels and see if you can get a big enough spread to make money. AstraZeneca, did that really did that split or something? Oh. Yeah, I'm not sure what's going on there. There we go. That's PLC. That's 193. That's 193. Okay, it's this one. It's the NYSE, not the London or whatever the hell that was. It's this one. This must have split or something. I don't know what's going on there. Something strange. I'll have to look at that. There's probably some bad data or something. Okay. So yeah, I'm just not seeing anything that's obvious, guys. Oracle just upfront put gamma, nothing special. A lot of these are already bouncing on their long-term spreads, right? These are all the mega caps, large caps, and stuff like that. So, nothing there, and I'll keep you guys updated and see what happens.